Let's cross to Chris Conway from the Australian Stock Report. He is live in our Melbourne studio for you this morning. Chris, welcome to the show. We've got some data in just on 30 minutes time. Do you suspect markets take heed of it, key off it, and see that as an excuse to maybe get some conviction behind this session or something else?
Good morning, Carsten. Yeah, look, in terms of the data drops, I don't think they're going to be all that relevant at 11:30. We've got the housing data. That could point to a weakening of the housing market, of course, which has been one of the engine rooms for the Australian economy in recent times. So that might have a little bit of an impact, probably more stock and sector specific though. I think the big one that everyone's waiting for is the yuan repricing at 12.15. That's the thing that's going to be shifting markets. Of course, that's not local data. So I think that's what everyone has their eyes on for the major driver and minor drivers for the Australian data at 11:30.
It seems though the prognostications on our performance are not playing out as expected. So there's no significant sell down this morning, unlike the falls we even saw on the street overnight. How do you explain that?
Yeah, well, at 4:30 yesterday, I had a look at the Dow futures. They were down 180 points, and of course the Dow closed down 252 overnight. So a lot of it was already priced in during yesterday's Asian session. The other thing to take note of is when this selling has occurred in the Australian market over the last couple of sessions, it hasn't been off the open. The market sort of opened, sat there, and then at points throughout the session, the sell-off has occurred quite quickly. Of course, we saw a very aggressive sell-off into yesterday's close and indeed in the back half of yesterday's session. So don't take, I would suggest don't take too much from the fact that the market has opened on solid ground. It's more likely to be the second half of the session, again, post 12.15 when we see some big moves potentially.
Your target on the XJO is just really on or under the 5,000 level. What is your time horizon for that to occur?
Really good question. It's there's no definitive answer to it, Carsten. I mean, if China and the worries out of China continue to build, then of course it could happen very quickly. I think one of the things that local traders and investors should be looking at are the key levels on US markets. So the S&P 500, of course, dipped and closed below 2,000 overnight. The Dow has just given up 17,000 for the first time since October. Those levels are key levels on those US markets, and they really need to hold here. Otherwise, you know, we could see a sharp sell-off on the S&P like we did in August last year when it traded very quickly down to 1850. So tonight's session in the US, I think, is not critically important, but becomes more important because those key markets are testing key levels. If they fail to hold tonight, then we very quickly could see the Aussie market down to 5,000. But 5,000 for me isn't really the tipping point. You know, we've bounced off 5,000 so many times towards the end of last year that if the market gets to 5,000, I don't think any decisions need to be made for long-term investors about their portfolios and stocks in their portfolios. It's the 4,900 level. That's the level that we've bounced off, I think, twice, again late last year. If that level gives way, well, some serious thinking needs to be done and probably some pretty important decisions need to be made for long-term investors.
And you're saying really the catalyst for all of what you've just said will be a fresh wave of doubt breaking out on China? Again, something from left field, because we're not exactly impervious to what has been occurring in the last few sessions, and again, it's not been a savage market fallout on it. I mean, it has been from China's own perspective on the Monday, but everyone else, okay, you look at a 1.5% fall overnight for the big board. It's not, though, lights out.
No, it's not catastrophic, and look, I think that's one of the messages for long-term investors. Certainly this week I've been counselling some of our long-term clients who had great expectations about the new year, wanted the market to rally as we all did, and of course, quite to the contrary, markets have fallen fairly significantly. They haven't capitulated though, and I think that's the takeaway. And you need to have a point in the market at which you reassess, which is why I say the 4,900 level is the point where you really should be looking, in my humble opinion, is that if it gets to there and then breaches 4,900, that's when you really need to start making some decisions. So yeah, look, you're exactly right, Carsten. It's not panic stations yet. We're not throwing the baby out with the bathwater. It's sit and hold tight if you're a longer term player. If you're a trader, of course, however, it's pretty simple. Sell commodities. Nothing's changed from last year. Sell commodities, sell oil, sell anything related to China, write it down to 5,000 or to 4,900 and then reassess there like everyone else.
Okay, and hence your call out on Iluka.
Yeah, so we shorted Iluka this morning above 580, pretty much on the open. They had a some production guidance late last year that said conditions were weakening, and of course we all know that Iluka basically sells all of their production into China. With the further worries about China starting off this year, we can see those conditions deteriorating further. Hence why we're happy to take a short position in it. We think it will move down to $5.
Are you seeing it at that level as vulnerable to take over? If so, who's got the will, who's got the interest maybe to exercise at those relatively beaten down levels?
Look, this feeds into the conversation I guess you've been having, Carlton, with some of the other guests on the show this morning about BHP and Rio Tinto and their potential to raise capital to take over companies. I don't think that in and of itself is a bad idea. It's good to be prepared. But a lot of other analysts have made the point this morning is, who's going to buy these distressed assets when there's no real clear evidence that we're right at the bottom of the cycle? Who would buy it? That's the question. Who would buy it? Yeah, okay, someone with a strong balance sheet, but it's an underperforming business. It's dealing with commodities that have been absolutely trashed and could fall further.
Well, that's interesting to say that. Yeah, I mean, Shell bought BG, and people were wondering even then, and that's how many months ago now, whether that was marking the cyclical low. Far from it, as it turns out, but it was no deterrent, was it, at that point in time?
No, it wasn't. And look, companies need to make decisions, and executives and boards are rewarded for making bold moves that end up paying off. Now, 2 or 3 years out from now, there will be a window that we will be able to look back and say, well, that was sort of the bottom of the cycle, and that was the point at which companies should have been making acquisitions. But in the fire right now, it's hard to do. And of course, those boards and those executives that get it right will have $10 million bonuses, and those that don't will fall by the wayside. That's the nature of the game. Me personally, I don't think we're quite at the bottom of the cycle yet. I don't think huge risks will be rewarded right now. But in the case of BHP and Rio and that proposition that they should be raising capital, I think it's right to be prepared. There are distressed Tier 1 assets out there that will potentially become further distressed and will be quality acquisitions for a company like a BHP or a Rio Tinto that has the requisite management skills and all the rest of it to take on board those assets and make them profitable longer term. I just don't think we're there quite right now.
Hear you loud and clear. And then there's Samarco to stress about as well in BHP's case, which hasn't gone away and won't in the next 5 minutes for all the known environmental reasons. Chris, welcome back, and thank you as always for that.
Thank you, Carlton.
Okay. Chris Conway there from the Australian Stock Reports.